We are talking tax strategy today with First Ontario Credit Union's Chief Risk Officer, Mark Perkins. So for people who are getting their tax returns back, you've got some tips. Let's start out with that first.
Yeah, so I mean, it's that time of year where you've either recently filed your taxes or maybe you're feeling the stress and anxiety of not having done it yet. But if you have done it and you're in the beneficial position of getting a tax return, you know, we always want to remind individuals to have a plan with that. If it just sits in your bank account, there's a good chance it'll just get whittled away over time.
Yep.
So, you know, do you have some high interest debt or other debt you want to make a lump sum payment against? Do you want to replenish a savings account or emergency funds for rainy day? Or do you want to roll it into a government program like a TFSA or an RRSP? And we know that if you contribute to the RRSP, you're going to get that tax benefit by reducing your taxable income in 2026 and get another tax refund in 2027. But really, it's just about having a plan. If you're getting a tax refund, you know what you're going to do with it, strategize around whatever your needs are, whether it may be a vacation, it may be something a little bit more fun than debt payment, but if you don't have a plan, it's just going to disappear on you. It's
going to disappear quickly, right? And then what if you do have to pay?
Well, if you do have to pay, there's a couple of things. One, if you haven't filed yet and you're late filing, you really want to get your taxes filed, even if you think you're going to owe money and you're a little bit scared about that, because one thing is you do not qualify for any of the government programs if you haven't filed your taxes. So whether that's child care benefits, disability payments, maybe low-income seniors programs for medical and dental, things like that. If you do file late, you're going to be charged a 5% late filing fee on the balance owed, plus interest on the first 90 days. It's at 7%, but it increases from there. The CRA will work with you. If you owe money, you don't have the cash available to pay your taxes, you don't have to put it on high interest debt or something like that. You can call the CRA, you can come up with a payment plan which will manage the interest expense and things like that. So they will work with you, but you got to file first.
Because it's really important, because filing is kind of the government's way of knowing who's out there.
Yeah, and up to date, and again, control over the programs and things like that. There is a lot of benefits that come with it that, you know, you want to take advantage of.
And then there's also lots of scams from people claiming that there was CRA, Canada Revenue Agency.
Yeah, it is a favorite time of year for scammers. Not that there's a bad time of year for them, but these bad actors, you know, taxes can be very complex and very anxiety-inducing for a lot of individuals. What do bad actors like to do? They like to create that sense of urgency and fear for you to act. So a reminder to the viewers that the CRA is not going to text you or email you with threatening language that if you don't pay by such and such a date, you may be subject to criminal prosecution. They're also not going to text or email you that you have a windfall tax return, and if you just give them your banking information, they can put it into your account.
Yes, don't do that.
So, I mean, artificial intelligence is on the rise. The complexity and sophistication of some of these scams are there, but you want to go to the source. You want to validate all the time. Go to My CRA, talk to the government. There's ways to validate what your actual situation is.
Good advice, Mark. Thanks very much. And if you have a financial question or a topic you'd like covered, email your questions to financefriday@firstontario.com. And if your question or topic is covered on air, you'll get a gift card from First Ontario.